What's up, guys? This is Joe, otherwise known as Catching BTC on Twitter. This is S&P Watch number 2 or 3. I'll correct myself in the title. I'm sure you'll figure it out by then. Where I do technical and fundamental analysis on the S&P's price action, as well as set some price targets and expectations for the future. So I'm just going to kind of keep this the same sort of. It should be quite a long video. I'm gonna go over the macro time frame, the low time frame, sort of what to expect from both of them, and sort of just targeting some levels. In the recent Bitcoin Watch video I did, it's 30 minutes long. This should be similar. Just identifying market turning points, liquidity pools, where to expect a turnaround or a large reaction, either on the upside or downside, and sort of just home in on where the S&P is at, and sort of look at some fundamental reasons as to why the market might sort of be topping out. Or if this even is a top out. But anyway, so let's get back to it. I've already left in I've left in this trend channel, this upwards trend channel that we've just tested the top of, and I've also left in this 2.618 extension. And the reason I left this in is, if we go on the high time frames, the 1 week here, and we look at the 2008 financial crisis. Okay, this is what this extension has been drawn from. So we topped out at about 1,500, and if you didn't know this, we bottomed out at 666. I did say this, and I have gone over this in a previous video. I've been tongue to level for months, but it's worth noting. And I recommend you watch the previous video because I just talk about this a bit more. But anyway, so the 2.618 extension is here. Okay, this is at 3,040. That's where we traded the other day, and we've had a pretty significant sell-off where we are right now. And if I put in the extension here, this isn't really as much to go by, but the 3.618 is here. Okay, so, and this is a good example of how Elliott Wave works and why Elliott Wave makes sense, and sort of how the market move in impulses, and why the markets top out at different places. So if we look here, so in the 2008 to 2007 to 2008 financial crisis, even 2009, it was a huge distribution period in the market. The market, as in, when you have these distribution periods and these huge sell-offs in the market, money changes hands, investment changes hands. It goes from, it weeds out the weak investments in the markets. And there's a great book on it called, I'm not sure quite what the book is off the top of my head. Let me get my Audible up. Bear with me, guys. It should come up now. It's called America's Great Depression. I highly recommend it. It just talks about how cycles work, and sort of why cycles are necessary, and how business cycles work. And essentially, when you have these distribution periods like the financial crisis, this is when the market gets overextended, super overextended, in terms of just credit, bad debt, bad investments, and basically these crashes, these downturns in the market, there's nothing to be afraid of. They're just completely natural, and the fact that people get so scared of them and think the world's going to end is silly. It's silly. Okay, so these are just distribution periods in the market where we weed out the weak hands, we weed out the bad investments, we weed out the bad credit, and we get back to a level in the market which is normal, and we can start to grow from again and produce new growth. And so this 2007 and 2008 financial crisis is really an interesting period in time, because this is when we introduced some heavy quantitative easing into the market, some heavy US dollar printing. And so if you take that extension from the top of here to the bottom of here, and the distribution that we've occurred here, and the reaccumulation and the buy pressure that was at the bottom of this market, from just investment funds, hedge funds, retail investors. Okay, so that is where the market turned at 666, and we turned around. So it's important to look at the extensions from that, because that is going to be the extensions of the market, the macro extensions. That is when these investors that have been in the market for 10, 11 years are looking to exit and take profit and enjoy that money that they've made. And we see this at this 1.618. It's literally dead on. We topped out in 2016 at this 1.618, and that wasn't a surprise. This was people stepping out of the market from the 2008 financial crisis and taking their money out and enjoying it, okay? And once that was over, we moved very quickly to the 2.618, very, very quickly. I mean, if we look at the time period, the date range from here, it took us exactly, however, how many of you guys want to do this? I mean, 6 years, 2,534 days. And then once we took out these not weak hands, but if you're talking in market terminology, technically weak hands from the market that took the money out, after we got them out, we moved very quickly to the 2.618, and we got there. I mean, I'll say it now, I guess. It took us half that time, okay? It took us 1,239 days. And this is how markets go parabolic, and this is a great way of looking at it, is because once we get past the sort of price zone where fundamental traders think the market's going to top out and people are taking profits, we move so quickly because people FOMO back in a way, to move up to where the next level of taking profit is or selling is. And that's just how exchange works, guys. That's, as soon as, if you're selling sneakers, you've got the sellers that are going to sell at $300, let's say, and then once the market for the $300 sellers is weeded out, and then we move to the next level, we've sort of got these $800 sellers and these $900 sellers that are going to take over the market once we've weeded out the weak sellers. And that's exactly how market works. It's just exchange, guys. And again, so we've moved to this 2.618, and it's very important that you guys know that, and that we are operating on a very overextended market right now. But anyway, so, coming into this zone, I've had this charted up for I think March, Let me look. I want to go back over this and go over it in a second, but April 26th, how long was that? 4 months? Off the top of my head, I don't know. But anyway, so we've got this 2.618 buy pressure extension coming to its close in 2019, 11 years later from the financial crisis, 12 years. But we also have the buy pressure we reaccumulated in 2016. The investors that we got in the market in 2016, we're getting to the very furthest extensions in the market. We're talking 3.618 and 4.2. And I don't recommend you use these, but they're just great to have as to back up some more positions that you're taking. And so really, there's no, what you guys have to realize is long-term investors are not stepping into the market at overextended levels, aka right now. These are retail traders and still institutions trying to squeeze as much as they can out this last bull trend before they start to flip short, take money out of their investments, and wait until the next best price level to enter for the long-term profits. And Warren Buffett will be waiting for this, and Warren Buffett will probably make, if he's still alive by the time the next market tops out, he'll be a fucking quadruple billionaire, I'm sure. But anyway, so we're operating very overextended in the market, and this is why we start to see a turnaround, because long-term investors are taking money out, hedge funds are taking money out, and they're looking to wait to step back in to get those best price levels that they can. And so yeah, so we're trading the 2.618, and this was in this zone, and we also had this here. So it's very normal to expect a reaction here, and if I'm honest, it's perfectly possible that this is the end of the bull market. It's perfectly possible. I'm not trading that. I'm trading that we're still going to 3,300. That's my next target. But it really depends. The market could turn around here. If you look at the Elliott waves, depending on how you do the count, it could be this. It could be 1, 2, 3, 4, and this could be it. And it would be perfectly reasonable for that to be it, because you've got this 2.618 extension, 3.618 extension from 2016. This would be normal for us to top out here. It would be normal. But what I'm trading is that we are in fact still in the we're in the final wave up, the fourth wave up. So this was the second in 2016. This was the second wave, sorry, and then we're moving up to about 3,300. I think my target was, and I'll go over why that was in a sec. So I'm trading this Elliott wave. This is what I think is going to happen. I really don't think Trump in his presidency and just the elections come up. I can't foresee the market topping out now, but it's possible. But that's just, it depends where you come in as a fundamental trader and a technical trader, and what sort of levels you're looking at. So anyway, so that's sort of what I'm looking at, and I don't believe this is it, but it's perfectly possible for it, and that's why you guys have to realize that the probability that the market, you don't really want to be in long-term long positions, because the probability that the market continues to 3,300 is a lot lower now because we're operating at such overextended levels. But I'm just going to quickly go over why I was targeting that 3,300. So, if we took this as the second retracement in the Elliott wave, in the 5-wave impulse, we'd be looking for the buy pressure we accumulated at the bottom here. And, I say this a lot, but it's like if you're in a bull market and you have a retracement and you do these Fibonacci extensions in the bearish direction, and you're in a bull market, you don't want to be targeting the 2.618. You want to be targeting the 1.618, and that's when you want to be out of the market or in the market, if that makes sense. So if you're in a bull market, you want to be targeting the lowest deviation from the mean, which would be the 1.618 if you're using extensions. And so that's why I think, because we're so close and so overextended, that's why I think the market won't be able to push past 3,300. I think that will be, it essentially. And if I'm not sure what these extensions say, but I know what that extension says. And I mean, bam, look at this retracement we had. I mean, the Fibonacci extension confluence is just dead on 3,300. And I'm sure if whatever this retracement brings, if we do move back up, I'm sure it would. I'll go over that there in a second. We'll see what kind of extension that produces. We'll look at the strongest price levels that I'm expecting for it to turn around at, if it does turn around. And we'll look where that extension lies. But anyway, so look, I mean, we're going to put a line here, 3,300. Sorry about that. And if I get, I think you can do it on the weekly. This will be a. Don't quote me on this because I'm not sure if this trend line actually works, but I remember it working on one of my things, one of my videos. That's going to be difficult to draw. Okay, yeah, there we go. I might even have to split this video into two because there's quite a lot of things I want to speak about coming up, but we'll just take the highs from here. So again, I don't like using this, but it's good to see, overextended wise where we are. So these are 10-year trend lines, okay, guys. This one is a 6-year trend line, and this is a 10-year trend line, and they are coming in. The way the market's lining up, they're coming in to this zone that I'm talking about, this 3,300 zone. I'll get my chart up to see if I put anything else, but it's coming into the zone. And quickly, whilst I'm on it, okay, so the reason I said the market can turn around here at this 3,040 level is yes, because of the extensions, but guys, there's a super interesting thing, and I talk about it in some of my videos, and it's the 1.127. It's not something that any traders look at. It's not like a respected Fibonacci level. It's usually the 1.272, which is what most of you guys would have on your chart. But if I put this in here, okay, this chart here, look where the 1.127 ended up at, 3,023, and look where we topped out at, 3,025. Okay, that is dead on, okay. And if we go back, I'm not sure where this analysis was. If we go back here, look, 1.127, we had a market turning point there, okay. That's 2016, and then if I go back in the past even more, if you guys really want me to, I'll try. I'm not sure where this chart is. But no, it's not on there. I'm sure I've got it in here. Oh wow, I've got an old chart up in here. Bloody hell, this is back in the day. Okay, this is a good chart though. This is what we want. Okay, I'm not sure I'm going to be able to find that today, guys. But yeah, as you can tell, I know the S&P off by heart. Goes back quite a long time. that chart. I think it goes back to 1960s, I believe I did that analysis on. But anyway, so the 1.127, just historically has shown to be a strong resistance point as either the end of a market or it's the final retracement before the end of the market. So that's why I had that on my chart. And if I go on here, let me just refresh this for you guys. I put this on because I couldn't not put this on, just because of the historic analysis I did at the time. And I was just like, okay, this might mean something. But again, if I press play, look at that. How could I have known that so long ago? We're coming back down. So we'll have to see. I've put my stop all the way up here. I'm not trading this, guys. Don't take my word for it. I'm not taking this trade. I'm waiting for 3,300-ish or 3,200 to step into any short positions. But again, I put that trade on there just, I couldn't not put it. It's just who I am, you know what I mean? It's just very interesting. But I did do an updated S&P chart. Maybe I didn't. Maybe I put it in the group. But anyway, we'll forget about that now. And again, guys, so this 3,300 level, that's why I was targeting this level. Just because the extensions that are coming in there and the trend lines that are coming in there, it's where I think the market will top out at, but we'll have to see. So I just removed these out, and we'll put some moving averages in, and we'll sort of step in on the closer time frames. Because I feel like we've covered. I'd be happy to say we've covered the macro time frames and what you're sort of looking for. So let me get the moving averages on and what we're sort of looking for. Okay, so we have this trend channel. I'm going to take these off now because we don't need these. And sort of we'll look now at where we might expect a retracement in the market. Okay, so what is the first step in identifying a horizontal and support resistance liquidity pool? Market turning points. Okay, so let's locate some market turning points that are coming up. We've got one here. We'll go back to the start. Another one here in the same zone. That's 2, 3. Here, I'm just going to put these all together because should we go? Oh shit. Three, 6, 7, 8, 9, and we might form a 10th. But anyway, so look, that is a stupidly strong horizontal support and resistance. We'll take from the highs there and we'll put it below there. So this is a strong liquidity pool in buy side, sell side, okay? Get that in there. So, for any market turning point for me to sort of step in or look for the market turnaround, it would be there. But that's not what I think is going to happen. I mean, we've got this 100 moving average and the 200 moving average so far above this liquidity pool that it's not likely that we'll get there, but we'll have to see how strong this sell-off will be. And if we look at closer time frame, so again, so this is I'll go over it after I've drawn this. Okay, so we'll look for the market turning points here. So we've got one here. This is the pool I was looking at, right? Yeah, so 2 here, 3, 4, 5. Okay, so this is the closest liquidity pool we have. If I'm not mistaken, I think we're already in it. So we'll take it from the high there and the low here. And so in this zone, you've got the 100 moving average got from the buy pressure, and then you've got the support and resistance liquidity pool, the horizontal support and resistance liquidity pool offering that the support as well. And if we talk about extensions here, we're in a bull market still. We're still in a bull market, not in a bear market at all. So this is a good example. So the strongest liquidity is going to be here. Okay, the market's going to want to tend towards there, but when you're in a bull market, it doesn't always reach these furthest liquidity pools, if that makes sense. It will reach the closest liquidity pool, and if it's got enough buy pressure there, it will turn around. So, it's perfectly reasonable for it to expect to hit this and turn around now. And if we look at Elliott waves, and why my bullish coming out to this 3,300, is I think this is just a wave extension. Got this one here, and I think this, to me, would sort of just be a wave extension within this second wave, impulse wave up. And I think it would look like this. It would sort of come down, You just go bam, 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 and break above, retest this trend. But that's what I think. But we'll have to see if that plays out. I think this is just a wave extension, because if you technically did Elliott waves talking about this as a it wouldn't make sense, because it's already broken that that first high made here, and it doesn't count as an Elliott wave, so, or at least it wouldn't count as a 1, 2, 3, 4, 5. But anyway, so if we look here, and I've been over this in the last S&P video, bam, 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 Elliott wave impulse on from the bottom, ABC retracement, absolutely perfect trading. We called this. A lot of traders stepped in here, made a good amount of money. Come back up here. We've got this, again, this 1, 2, 3, 4, 5 wave count. And then now we're sort of looking for this ABC retracement to take us back. So, you know, usually it wouldn't come this low. So I'm skeptical as to whether we'll see lower. But, you know, and I can't see the ABC here, but it would probably look something like this. There was a big wave up here. And that's what we could be trading here. And this could be the last ABC call before we go back up. And that's the sub waves within the larger high time frame waves. Sorry if that confused you. You can skip this part if you don't understand Elliott waves. Okay, so I'm looking for this to offer some support and resistance. If we slice through this, guys, you know, we might have hit the top of the market. It's quite possible we've hit the top of the market, and we might form a sort of head and shoulders pattern. If we come down here and sort of move back up here and trend back down, it's quite possible, if I'm perfectly honest. I don't like how strong this sell-off is. And if we don't sort of see a turnaround here, I would be quite bearish on the market, but we'll have to see, because slicing through this without any sort of move would be terrible. But there is that 200 moving average below it offering that support, which we might get a stop run of. We've got the 100 moving average already offering buy support, so we'll have to see what that does. But those are the two levels I'm really looking at now. You know, when we move back up, you know, there's not a whole lot for us to work with here, but I'd be saying, you know, this would probably be the next support and resistance coming up. So if we come back up, you'd be taking profits here. So there's quite a few long position plays you could be taking here, but I don't recommend them. I recommend you guys just sit out until this retracement sort of over, and then look to step in once we sort of confirm the direction, because right now we don't have a confirmed direction. Yeah, we're trending down, but it's quite possible we could trend back up straight away and break the recent highs. And if we get the fib extension, we're going to put some fib extension here on the local time frames. You know, we've got the 618 coming into this pool as well. 618 at the bottom of it, the 200 moving average, this liquidity pool here. So it's possible we'll probably see lower prices in here and trend in here and then move back up. If we break below the 618 and that liquidity pool, it is not good in my opinion. And I don't think I think we might have topped out on the market. But again, we've had some insane resistance here. We've had this trend line extensions, so it's perfectly normal to expect a retracement here. This is institutional people stepping out of the purchases they made here in 2019. So we'll have to see what happens there. But anyway, guys, hopefully that covered enough thing. I know I blabbered on a bit. I'm sorry about that. I'll try to make the next one a bit more informative and direct and keep it straight to the point. But it was just a nice little overview of the S&P and sort of levels for you to be looking at. I'll be posting some trades in the S&P channel once we sort of confirm the direction, and I'll go over it a bit better. But that's it for now, guys. I hope you enjoyed it, and I'll see you in the next one.